So this was a high pivot, high pivot, high pivot. We broke out, we confirmed. Now you're retesting. So this was resistance over here. It's now support. That means that we should see a move up coming in Bitcoin later this week.
Hello and welcome to the Daily Crypto. We are joined by Gareth Soloway, who gives us an update on his previous market predictions, and boy was he right. Make sure to watch until the end because this could help you in planning your next move in this market. So without further ado, let's continue with the video.
Basically what you have here is this is what we would consider bullish consolidation. And as long as you see this 21.8 hold, and we're right on that right now. So this was a high pivot, high pivot, high pivot. We broke out, we confirmed. Now you're retesting. So this was resistance over here. It's now support. That means that we should see a move up coming in Bitcoin later this week. And again, I would guess that you're going to take out the 24.2 level, and I think you'll probably get to at least 25.5. I even think 28,000 is in the cards over the next 2 weeks or so. So I still have a little time left from that 30-day segment, right? So I'm sticking to still long Bitcoin here.
Since Bitcoin broke above the strong resistance point of 21.5, it is now retesting, and according to Gareth, it should hold and rise up to the 25K level.
Yeah, I think anything else would be somewhat shocking. There's a small chance of 100 basis points since they don't meet again until September. So there's like 2 months where they can't do much. I mean, they could do a surprise rate hike, but remember the Fed doesn't like to show that they're out of control, so it's very unlikely they would do that. So 75 basis points, and then I think they're going to be data dependent going into September. My guess is they're almost done with their rate hike cycle, right? So again, we've already seen the economy come in weaker and weaker. Every piece of economic news is showing weakness out there, from housing to PMI to jobs. Unemployment numbers are still low, but that's a lagging indicator. You'll see that start to uptick in the coming months. So my guess is by September, they might do 25 basis points, but for the most part, my guess is they're done, and that's going to be good for a Bitcoin type move up in the near term.
The next Fed meeting is scheduled in September, and with the rate at which the economy is collapsing, Gareth believes the Fed could increase interest rates by at least 25 basis points, if not more.
I mean, it's the economic definition is 2 straight quarters of negative GDP growth, right? But that's very unfair to most working Americans and most working people around the world, because there's a large portion of the population that's in a recession already because they're not making that much more than they were before, but they're paying such higher prices for food and energy, right? And even everyday materials have gone skyrocketing higher. So I think you have to start breaking recessions down into key metrics. The rich are doing fine. Everyone else, honestly, is probably in a recession.
He explains the basic definition of recession for those who don't have much financial knowledge. Due to rising inflation, the working class has been affected the most as they struggle to meet their basic needs, whereas the rich are still relatively unaffected.
Yeah, I mean, bottom line is they're hoping and dreaming. Just like the Fed, the government has a bad historic track record of being correct on anything. So I think you have to understand what you're dealing with. You're dealing with people that have to say things for political reasons to make it sound good. It's not the reality of the situation. So again, you will see unemployment start to spike higher. There will be pressure on the Fed to stop hiking rates. Inflation is coming down. It's hard to see that, but if you look at gasoline prices, that has happened. So you're going to see a kind of a fade on those inflation numbers, and then that will be the catalyst for the Fed to say, okay, we're going to step back now and go basically no more rate hikes, so that we can see where this economy goes. But basically, them stopping, the markets are going to like that. Bitcoin is going to like it. Risk on assets, at least for the near term, will like it.
Gareth makes a very valid point here. We know that the government doesn't want to acknowledge the severity of the situation. Instead, they downplay, distract, manipulate people into believing that things aren't as bad as they seem. Although Gareth does believe that inflation is coming down slowly, as we saw gas prices drop quite a bit.
So I think what the market I don't think wants a recession. We don't want to see negative GDP growth, because if we're already into negative GDP growth and the Fed is still tightening, that's very bad. That means you're talking really bad recession to maybe depression. So I think what the market wants to see is a small growth in GDP, something like 1 to 2%. where it's just enough to say, okay, the Fed can step back, but we're not in a recession, but not high enough to say the Fed has to continue to hike dramatically. So it's almost like that Goldilocks number where it's not too hot, not too cold, just in the right spot.
Even though some financial analysts say we need a recession for a healthy growth, Gareth says that it is the last thing we would want. According to him, the ideal scenario would be to get a small but positive GDP growth of 1 to 2% to make sure we don't see a recession, because otherwise it means the Fed will have to take more severe measures.
Because this is the problem, is you still have high inflation, right? It might be coming down a little bit, but if we're already in a recession and the Fed can't, I mean, remember, the Fed can only start printing again and saving us from a bad recession if they get inflation back to 2% or under. And they're not even close to that. I mean, we're still at like 8 to 10, 11% inflation. So that would be really bad if we got some of those numbers. I think you see a massive exodus from stocks, and even risk on assets would sell off like crypto.
If we see negative GDP, stocks and risk assets will see a massive fall, and it's very likely the Fed will print more money, which is actually detrimental in the long run. Do you think a recession is needed to rectify the imbalances in our economy? Like this video and subscribe to our channel so you can stay up to date on the latest market news and events. See you guys in the next video.